Hey everybody, welcome to Stock Trading Pro. My name is Pete Renzulli. We've got a lot to talk about in the stock market today. If you've been actively trading, the stock market, the price action, the tape has absolutely turned in the other direction. But we're going to talk about something interesting today, which is an absolute sacrilege thing in the stock market, which is bottom fishing. Everybody knows it's not the right thing to do, but should we be looking to buy stocks now heading into the remainder of the week? I'm going to make an argument for yes. And hopefully you're going to be able to take what I teach you today and show you some individual stocks and do a little bit of scanning to show you that no matter what the market is doing, there's going to be some opportunities to buy stocks, whether you're day trading stocks or swing trading stocks. Investing, we probably need a little bit more push to the downside where we're going to get a little bit more into that value area, but there are opportunities to trade today. So I'm excited to hear from you today. I'm all pumped up. I went to a wedding in New York last week, had a nice long weekend. Hopefully you did too. I'm all jazzed up. Stick around because we have a ton of stuff to talk about, some actionable stuff today. One of the biggest questions that we get all the time is how do I structure my trades so I'm always looking at stocks that have obvious order flow and the greatest opportunity to move in my favor. Plus, we're going to talk about something that's not really discussed that much, maybe not even talking in books that often, which is the proper type of trade management in the current market condition. So in other words, we have stocks that are pushing to the downside right now and the bigger picture of the stock market pushing to the downside, but some stocks are actually rallying. How do you handle strong stocks in a weak market? That's what we're going to talk about today. But first, I want to make sure I say hello to a few people. We got some amazing, amazing people here. Don, where's Don? Don is my buddy. He's in our community. Derek's on Facebook with us. By the way, get back into our Facebook group. It's free. We want to make sure that you get in there. You can click that link below the video. Been beating up bad. So that's actually what we're going to talk about today. You know what? I celebrate how honest you are discussing that, Derek, because that's exactly what we want to talk about. And this goes for everybody who's on this call right now. The time to be active asking questions is when it's tougher. Everybody knows how to celebrate when everything is awesome and everybody feels like a genius. Right now, with the stock market being a little bit tougher, right now is when you want to ask better questions. Right now is when you want to build your strategy, because if you could make your money in the current stock market environment, which, by the way, is amazing if you have structure, if you could make money in this market environment right now, you are golden, because right now it's a little bit of back and forth, a little bit bearish, kind of trading both sides of the market. We're buying stocks, hedging on the other side, short selling stocks, buying inverse ETFs. There is a lot going on right now. The opportunity is absolutely glorious right now, but you need to adjust how you're interacting with the market right now, simply based on the fact that the volatility index is skyrocketing right now. We're going to talk about that as well. I hope I remember all of these things. Stick around. We're going to be back in just 1 second, okay? Okay, so thank you so much for joining me here today. As with everything we talk about, it's all for educational purposes, but it's my mission to help you make better decisions. That's what we really want to come down to. It's up to you to make the final decision. I want to help you make better decisions. If this is a big if I do a good job on this video today, please do me a favor. Make sure you give us a thumbs up and make sure you subscribe if you haven't already. We have brand new educational content coming out soon. The single biggest thing that I want to talk about right now is the current market condition and whether or not bottom fishing, which we all know is a big no-no, do not bottom fish. Here's the challenge that we have right now. Is bottom fishing the right thing where stocks have pulled back far enough now where they are now too far? That's not a good way to trade. However, stocks have normal moves. Every single stock we have, whether it's a bullish move to the upside or a bearish move to the downside, stocks have normal moves. So if we go into the S&P, and we kind of map this out. I'm actually going to get the moving average off of there. What we want to look at is the current bearish move in the market right now, and we want to compare that to recent bearish moves. Now, we obviously talked today about whether or not bottom fishing is the right thing to do. Let's be super clear so nobody spams me in the comments. Bottom fishing is bad. I agree. Bottom fishing is bad. However, there are certain situations where the likelihood of a stock continuing to go in that direction is less. So I want to be clear about the strategy that we're about to outline. I believe right now that the stock market, and specifically the S&P 500, is near a short-term bottom. Now, remember, everything that we do is if this happens, then I plan to do this. You put those two things together, you are aces as far as understanding you're in control. It has nothing to do with what happens in the market. If the stock market bottoms out, I'm going to show you why in just a second, then I plan to have a list of stocks that already have bullish order flow while the market's going down. We all know that as relative strength. So the first thing we're going to do is we're going to take a look at first, are there any stocks that have relative strength? Well, if we take a look at the sector rotation as we do every day, there's really not that many. Let me actually blow that up a little bit for you so it's easier to see. You can see right now, it is just one ugly picture right now heading into Wednesday. But here's the thing we want to talk about. If we break this down a little bit further, and what I want to do here is I want to work our way over into the last bearish move, not the bullish move, the last bearish move, which essentially is between April and May. So let's say all of April and all of May. And what we want to do is we want to take a look at the last time that the SPY went down. So we're basically looking at 450 down to 415. Now, this is what's fun about, I got to say hello. Hey, John, how's it going? Good morning, John. This is really where trading gets fun and really where you now have a structure to say, I know exactly what I'm looking for. If I see it, then I know what to do. The biggest challenge that people in the stock market have, and some really smart people, quite honestly, is they're trying to look for everything. If this and this and this and this and this and this, and they can't make a decision. It's like having 5 watches. All we're doing right now is we're coming up with an answer to what does the S&P 500 normally do when it has a bearish move in a bearish order flow. So that's what we're looking to. That's the question we're looking to answer. And anybody can do this. It's really simple, right? So why this here? Why this window between April and May? Well, right here, we had this rally, and then we had this top here, which broke this rally, and now we have a bearish move. This move from here to here is roughly $35. So that's someplace we're starting, right? We're not guessing. We're not predicting. We're saying, tell me what you normally do. First one we're looking at is $35. Now, if we start from the next move, which is right here, where it paused, rallied, and then pushed down to the next move, we're basically looking at right around $35 again. So this is golden information because now we're saying we're not guessing, we're not forecasting, we're not predicting. Get all that garbage out of your head. Right now, we are answering the question, do we expect bearish follow through over the next short-term part of the market? Now, why is that important? Because if you buy puts, if you trade inverse ETFs, which go up when the market goes down, or if you just straight up short sell stocks, betting that they are going to go down, you need to know how much room is left in the trade. So in other words, if we choose to accept risk, is there acceptable and likely profit for accepting that risk? So we talk about this a lot. If this is the normal reward, right? If you buy it here and it goes all the way up here, you got all of that room. But if we take all of that reward potential out of the equation, that's making you a one-to-one trader or even worse. So this is where a lot of traders get messed up in the head and they doubt themselves when you shouldn't be doubting yourself. Because you're like, but I took a good trade. It's on the right side of the market. Oh, why me? Every time I put a trade on, it doesn't do what I want it to do, right? It's because your timing is off. So what we just did, now we're building that argument for the trade, right? We're going to get into a couple of ideas and some other things that are affecting the market today. We just established the fact that the 2 last bearish moves in the S&P 500 were roughly $35. So now we're going to go over here where we have clearly broke this really, really clean bullish move to the upside, right? Bam, right there. And that started the next move. So if we take a look at the S&P 500 and take a look at the next $35 move, or pretty close to a $35 move, there's not a lot of meat left on that bone. So what does that mean? Does that mean now we just jump in there and start buying the S&P 500? Does that mean we start jumping in and buying all these stocks that have gotten beat into the ground, like NVIDIA, for example, which is the one that we used as our cover today, or Zoom, ZM stock, which is just hovering right at this $80 support level? Are we going in and buying and bottom fishing these stocks? No. Let's be very clear about that. Remember what we said. If the market bottoms out, then we will buy stocks that have relative strength. This is where traders get in trouble. Maybe you're really smart, but you can't figure out that last piece. It's critical that whether we're day trading or swing trading, to get in there and figure out which stocks are showing relative strength when the market is going down. That means, and this is the language you want to have, that means that the order flow is holding the bid. Holding the bid means they're not letting it go down. That means that there's buyers under there taking on all of the selling, and they're saying this stock is valuable. We think it's going to be higher in the future, so we're going to start holding it here. If and when the market bottoms out and reverses, those stocks with relative strength are the first stocks to rally rally the biggest, because they already had buying pressure while the market was going down. This is just kind of simple stuff, but you need the structure. You need to say, if this happens, then I plan to do this. So looking at the SPY again and the $35 move on average, essentially what we're saying right now is that there's not a lot of room left for a normal bearish move in the market, and we could see 3 to 5 to 10 days in a rally, right? So what stocks would we be going to look at? Before we get to that, before we dive into the stocks, I want to make sure that we take a look at some news today. Beige Book, this is a really big one by the Fed that comes out today. That can move the market. You absolutely need to be on top of that. Earnings, GameStop and NEO. NEO actually not having such a hot morning this morning. It's actually down 6%. It was actually down more than that before, and actually right at this big support level right down here. Now, we got a lot of questions about NEO. We've been trading NEO in our Discord community pretty actively for the better part of the last 2.5 years. I like NEO when it's over $20, and right now it's down at 16, so I'm not looking to bottom fish. This is not one of those stocks that has relative strength. A stock that did have relative strength yesterday, and was specifically talking about maybe a little bit more on the day trading side of things, is a car company, an EV company, not called Tesla. And I want to show you what that looked like yesterday. So we're working our way from the day trades up to the longer term positions. We're going to build that argument. And it's this stock. It's one that you might not have expected to have a big day yesterday, and it looks like kind of a big bag of nothing, right? However, look at what this stock did yesterday while the market was weak. Now, the rest of the market pulled back a little bit, but this is a pretty darn big move if we're going from the low yesterday around 32 up to 35. A $3 move and a day that the market was mostly bearish. And let's actually, if we take a quick look at the market and we take a quick look at the SPY, you can actually compare that while the market was going down, that stock was going up. So these are the kind of things that we want to start spotting at the end of the day when we do our research. And I just want to show you something really quickly. If we start to dig into the research and we start to look at all of these different things, right? So many different things. Market's getting pounded. The Dow's down 173, the NASDAQ, right? Everything's down, right? There's one thing on this screen that in a heartbeat, you should be like, those are the stocks that I want to at least put into a little bit more of a game plan, a little bit more of a research. I want to see if there's order flow. And I'm going to show you how to do that right now, which stocks have relative strength. So right out of the gate, you should be able to take a look at this and say which stocks had buying pressure while the market had selling pressure. So you can start to make a little bit of a list. That's one way of doing it. We're going to keep breaking this down. Now, I want to get this across really, really in a way that I hope it inspires you to love the market, to love trading stocks, to really be enthusiastic that you know what you're doing. Success in the stock market comes from having structure and knowing what you're looking for. It does not come from predicting. It does not come from forecasting. It does not saying, I think that's where it's going to be in a year from now. Nobody knows. That's a bunch of garbage, right? However, if you want to have unshakable confidence in the market, it comes down to this: knowing what's probably going to happen next and knowing what you definitely plan to do. So remember what we just talked about before at the start of this call. We said, if the market and the argument that we just built that the S&P 500 is reaching a point where the average true move does not have a lot more room to the downside, and if that turns into a short-term bottom, then we will be looking at stocks that have relative strength because they already have order flow. So the first and smallest order flow is yesterday's trading. That's very important, but we're going to keep diving this down. Now, one of the things that I teach in our community, and this is very important, You want to hit order flow from different angles. So you sometimes from the previous close, sometimes from today's open, sometimes from the last 5 days. You want to look at all the stocks that meet that criteria because some of them might meet the scan, but they might not be trades. They might not be near the optimal entry. So I'm going to walk you through it. You might want to watch this video more than once because it's going to take a little bit of time for you to develop the habit of doing all these. Now you'd be like, oh my gosh, I got to run all those scans. It'll take you 15 minutes. If you don't have 15 minutes to create that amazing life that you want, stick with your job. Nothing wrong with sticking with your job, but I'm going to tell you this, and this is a fact. How you spend your spare time will dictate how you spend your future. Take that little bit extra time to think, to get motivated. Take that little bit extra time to read personal development books. Take that little bit extra time to do some game planning. You will be shocked at how that adds up. And all of a sudden you're like, wow, I can do anything. Trust me. Trust me. I want to say hello to Stacy Edwards today. Stacy, good morning. How you doing? And my buddy Lewis. Lewis, good morning. All right, so we're going to keep breaking this down. So one way of looking at this, the short-term bullish order flow on a day that all three major indices closed down. Now we want to start to look for some pockets of opportunity. So real estate yesterday had some buying. Healthcare, especially Eli Lilly, that was actually in our list in a big way yesterday, finding some buying pressure yesterday. Not banks. Banks have actually still been weak, and we're looking at financial. Now we're actually going to break this down a little bit deeper. And look, healthcare is still in that picture. So if we look at healthcare and take a look at the healthcare ETF and break this down just a little bit more into the hourly chart, you can see that we had a little bit of buying last week. We had a little bit of buying here, a little bit of buying here. Not yet. So we're breaking it down now into some of the individual stocks that are showing good order flow while the sector is weak. So now we're working our way into that a little bit more. But what I want to show you right now is something that two different scans, super easy that you can run. One of them is relative strength to the market, but you first need to have minimum criteria on that. So if we're taking a look at FinViz, which is a very easy software to use, we're going to go into what is my primary scan, which is over $15, average true range of $1.50. So it means from high to low, and over 2 million. So essentially what we're mapping out there is stocks that are over $15. I don't trade anything under 10, very, very rarely. Average true range, which is $1.50 minimum. So that means it moves an average of $1.50. So I'm looking for volatility, opportunities to make money, and average volume of 2 million. That's what I do. You could do less than that, completely up to you, but I want liquidity because if we want to get to the point where we can trade size, trade bigger positions, we need to make sure that there's enough shares. If we want to get out of that thing reasonably, that there's a lot of shares, we can get out where we want to. So that's the minimum criteria. But that's not what we're looking for. That's just setting it up. Now we're looking for stocks that are showing relative strength while the market's going down. And there's two different ways we're going to do that. The very first thing we're going to do is look for stocks that are above the 50-period moving average, and that brought that down to 83. We're also going to take a look at performance and look for stocks that are up at least 10% for the month, which is the last 21 days. And that just brought all of the stocks on Wall Street down to these 22. But we want to make this even stronger. The market went down again yesterday. Now that we have this filtered information of stocks that are relatively strong over the last 50 days and over the last 21 days, while the market's getting beat up, which stocks were also strong yesterday? Now, here's where we twist it a little bit. We're not looking at change from the previous day. We're looking at change from the open. Change from the open tells us if there's a large green candle on top of that other stacked order flow criteria. Now, again, there's a lot more to this. There's understanding how to manage the trade and position sizing and all that kind of stuff. But the number one job we have is first, is there obvious order flow? And then we look to time it. Too many people make the mistake of tell me where to get in, tell me where to get in, but they don't have order flow. So that means that the odds of following through are small. So that's the first part of the scan, what we just talked about. But now what we're going to do is we're going to hop on over to the column all the way over here, which is change from the open. So we're going to take these 22 stocks and we are now going to sort change from the open up 1%. Only 4 stocks meet that criteria. And we're going to go into those stocks a little bit more. So FSLR, if we take a look at that and a little bit more, let's actually go out to the daily chart. FSLR while the market's getting beat up, again, somebody here mentioned solar stocks. I think it was Stacy. Look at what FSLR is doing while the market's getting hammered. That's one stock, okay? Breaking it down a little bit further, GFS. Now, let's see if there's a trade in GFS. FSLR will definitely be in my list. GFS. Now, it meets all the criteria. It's above the 50-period moving average. It's strong for the last 20 days. Is this stock a buying opportunity where it's, yeah, I can't wait to get in there? Well, it's not exactly this, and it has too much resistance here. So if I was game planning this stock, I probably wouldn't be doing anything here until it gets above 64, because then if it gets through 64, then we have some room to run up to 78. So again, you know what's super important about doing this right now? This is the difference between I saw a stock in an alert versus it's a trading idea. Because remember, there's obvious and then there's risk reward that makes sense. Reward potential is worth it and likely for the risk that we need to take on the trade. So even though GFS meets the criteria, it's not a trade yet until it gets over 64. So let's actually just break that down again, and you can see that over here. So if we go into the other stocks in that list, Sava, look at that big green candlestick in Sava yesterday. Now, this is where we get into liquidity conversations. Now, Sava meets all the criteria, right? But look at this stock as a choppy mess and has news out all over the place. But look at how it filtered out a big green energy candlestick to trade for today. Now, remember at the very beginning of today's call, we talked about managing trades and different types of opportunities. We also just talked about breaking down the structure of the minimum criteria before I even look for a trade, which is average true range of $1.50, average volume per day of 2 million. And that's over the last 30 days typically. Sava, even though SAVA meets the criteria and just had an unbelievably good day yesterday of relative strength, the one thing that you need to know when you're picking your list of stocks to trade is what kind of spread do those stocks have? What do they normally do? So Sava, SAVA, is a stock that we talk about a lot in our community. However, the difference between trading something like FSLR or AMD or Apple or even NVIDIA, where there's plenty of daily liquidity, versus trading Sava, where there's not daily liquidity on a regular basis. When it has news, it's very active. You need to understand the liquidity and what the stock normally does to adjust your position size. So, for example, in AMD, I might trade 2,000 shares very, very comfortably. In Sava, I might trade 200 shares because it has a very wide spread and the liquidity is inconsistent. So I might still want to get up to that big position size, but my initial entry would not be the same. So that's pretty cool, right? So now you need to understand, what does the stock normally do? Like, oh my God, that's a lot of work. Well, you want to make a lot of money, you got to put in a little bit of time. This isn't, we're on Wall Street. You got to put in that little bit extra work. You want to get paid? Put in the time. Pay your dues. The markets will pay you. There's definitely trading beings up there that will say, let's use Lewis as an example, because Lewis in our community, Lewis works really, really hard. Game planning, amazing, calling out great ideas in the game plan in the community. They're going to be looking down on Lewis. They're going to be like, he keeps working hard, and he's going to break through to the other side. And eventually it's going to happen because he put in the discipline to put in that extra time to say, what am I looking for? If I see those ideas, and again, we just take a look at this criteria. Let's go back to the scans. This was the big one here, up 1%. Now, if we take that out of the equation, we can still see that 22 stocks met that criteria. Now, what we would do is we would break that down by the week, which is the last 5 days, and still the same stocks. Now, one that just popped up in there, two actually that are going to be in my list today, CEG, PDD, and CAH. Now, this is really where it gets a little bit more fun, because now we're on a treasure hunt. Like, okay, those first stocks that we discussed, FSLR meets all the criteria. Sava, okay, we want to work into that position. But what other stocks have had relative strength over that time while the market's going down, just in case the market bottoms? PDD had good earnings. PDD is in the list. So if we take a look at that and look at what PDD has done since earnings, which is over here. Now, the stock has pulled back a little bit, but it's pulling right back to this breakout level. So this is an interesting one. So what am I looking for in PDD? I'm looking for yesterday's low to hold as support, and then look for the stock to rally again. If the stock breaks down and continues to go down, that means today might not be the right area, but I'm looking for it somewhere around 66. Now, The one that is really interesting today, which still meets the criteria, is this CEG. Look at what this stock has done. And I'm just going to give you a very quick visualization if I can pop this up on the screen and compare it to what the market has done. This is the market. This is the SPY going down, the S&P 500, and this stock has not moved at all. And it's actually up $1.63 this morning, on top of the fact that the market is not doing anything in a bullish manner at all right now. So does everybody see, if you could just do me a favor, type into the chat, do you understand that successful trading is actually easy if you have a system? But let's make sure that we understand the parts of successful trading. We just rattled off at least 3 or 4 stocks that you could be looking at this week. I gave you the scans. I told you exactly how to do that. The first part of successful trading is the mindset. Actually, it has nothing to do with all the other stuff. The first part of successful trading is understanding that each trade doesn't matter. What matters is that you have an edge. An edge is the probability that it works more often than not, meaning if you take trend trades, most of them will do what you expect. That's the mindset, believing that edge matters most. The second part is actually building an edge, which our edge is order flow stacking and tape reading. That's how we put pieces of the market together. Then the third part, which is probably the part that a lot of people don't give enough attention to, which is the actual trade. It's actually between entry and exit. So each of those are simple dimensions to trading: believing in an edge, developing in an edge, and then learning how to make money. What separates you when you get to that level, or when you really have this burning desire inside of yourself to be successful in the market, is that you understand that third part. Managing the trade is where the money is. And we have a couple of hundred people on the call. While the call is live right now, we'll end up having a couple of thousand who watch this video. We can all look at the same stock, get in at basically the same place, and we could have 2,000 different exits. The real money is in the exit. Managing position size, managing the exit, understanding when to scale into a position versus understanding when to get out of a position, which is something we talked about at the beginning of this video. As the market is going down, if you're looking at buying opportunities as the market's going down, so again, let's just take a quick look at Riven yesterday, because that's a pretty darn good example on the day trading side of things. While the market is going down yesterday, and you can see it's actually going down while Riven's going up, this profitable opportunity in this stock. If the market's going down, but you're a buyer, those are opportunities where you want to be a little bit more conscious that the bigger picture pressure is to the downside, and any profit you have on a strong stock in a weak market, you need to be managing that a little bit tighter. So in other words, when that thing slows down, you're like, I'm hitting the road. I'm not doing anything else, because this is a great opportunity that you did and found on your treasure hunt, which we call relative strength. Let's talk about a different trade idea. And I don't know if Gabe is on the call right now. And this is actually something that came out of our coaching session last night, which is Match.com. All right, let me actually take a look at this. Now, if we're taking a look at Match.com, you can see that even while the market was rallying, Match.com was going down. Gabe actually put a trade on over here. Now, this is a different scenario. He put a trade on in a stock that was weak while the market was rallying. And you could actually see here the market's going up and this stock is going down. Now, the difference between this trade and the other trade, this stock right here, the market's going down and the stock is going down. And we did a deep dive on this, probably about a half an hour last night on our coaching call. If you remember, and I'm just going to bring this into the picture again, because I really want to make sure that we talk about this kind of stuff. If you remember the stock market power pyramid, which we talk about, which is building that argument for ideas where you have the market, the sector, the stock, the group, and then the stock. So what Gabe did on that stock was the market was down, that sector was down, that group of stocks within the sector, and then the individual stock, right? So in this case, we're talking about Match.com. So in this case, where you're trading in the direction of the market and you stacked that pyramid with your idea, in that situation, you have more reason to expect a better follow through, and you can give the stock a little bit more room to wiggle because you have the big picture on your side, and you could look to add to that position as long as it's still doing what you expect it to do. So what's kind of fun about that is, I always like to bring it back to driving, is our job while we're looking at, oh, Gabe's here. Good morning. Gabe, that was a good idea last night. Awesome. So I like to bring it back to driving, and I think this is easily one of the best ways to understand this. When you're driving, sometimes you could drive 75 because you recognize those conditions. And that's the trade that Gabe put on, short selling Match.com, because the market was going down. He's like, yeah, man, the road's wide open, right? But then there's other conditions where you're still going in the right direction, but it's stop and go traffic, a rubbernecking delay, it's raining, it's snowing, whatever it happens to be. Those are the ones where you got to be holding the steering wheel pretty close because you want to protect, because it's not perfect conditions, but you're still going in the right direction, which is the other trade that we just talked about in Riven. So I want you to maybe watch this video one more time, because we really broke down the structure of finding stocks to buy while the stock market is crashing. We also built an argument for what we expect, what normally happens in the S&P 500. Maybe it's got a little bit more room to the downside, but what it normally does is almost reached. If it stops going down, then we have to say which stocks are likely to have the biggest move up if the market bottoms out and reverses for a short-term move. It's kind of fun. We're like just putting the pieces together. If this happens, then I plan to do this. If this happens, that's probably going to happen next. That's where trading becomes fun, because now you're not guessing. Now you're saying, I know exactly what I'm looking for, and I know exactly what I plan to do. And that's where it becomes really exciting to be a trader. And you wake up every day, you just love the markets. All right. That's all I have today, everybody. Have an awesome day. Go have an awesome experience in the markets today. If you have any follow-up questions, please leave a comment below the video. Absolutely get back to you as soon as possible. If we did a good job today, please do me a favor, hit that thumbs up and make sure you subscribe, because I'd really appreciate it. But more importantly, it lets me know the type of content that you like to watch as well. So have an awesome day, everybody. Leave a comment below. And if you're not in our Facebook group, by the way, it's a free group, plenty of conversations in there. Click that link below the video. I'd love to see you in there as well. Have an awesome day, everybody. Thanks so much for your time. I really appreciate it.